using this. All right, so let's begin our session. Good morning, everyone. My name is Benji, and thank you for tuning in to this wonderful session. Today is on Friday, 8th of August 2025, and I'm delighted to have you over to this session. So today is going to be an impactful session where we're going to just break down a few pairs. Then we're going to be having a guest speaker all the way from Nairobi from 9:30, who is going to come in and share a good ICT concept, which is called time and price. Okay, he's good at it, and he's perfect at it. And when he explains about it, you're going to understand more on the same. So he's from Nairobi. He's also an ICT trader. So he's going to come in and also share more on the same. So let's dive into the markets and we see what we have. Now, yesterday was a bit chaotic in the market on Thursday, but we were able to actually get some good pips out of it. US 30 with the likes of gold, okay, and also USD they moved actually quite well. These are one of the most volatile pairs that we have in our markets, and we're able to capitalize on the same. I usually tell you one thing, out of around $7.7 trillion that is being traded in the market, getting $100 won't be that hard for you. Imagine $7.7 trillion per day. That's the volume that is being generated, the money that is being circulated in the forex market. But we just want 100 or even 50. I know there are some of you who want 50 and 100, but for us who want 200, 500, 1,000 in a day or in a week, it's very possible. Just simply by being consistent, tuning into these sessions, and also being part and parcel of the market. Being active, being an active trader is actually what will make you a different trader from the rest of the traders and you who want to become a professional trader. So it was a bit chaotic. I was reading some fundamentals on FX Street. I usually use FX Street for fundamentals and reading what's currently happening. And let me just shift this to what I was reading through, and the dollar has kept on depreciating over, and that's what we had over since Sunday. So since Sunday, let me just come to the fundamentals and we see what we had. So since Sunday, when we had our Sunday live analysis session, when the market had this big drop to the downside, it's a very big candlestick, and I anticipated that we might tap into this daily FVG, okay, this bearish, then go down to this bullish FVG. Then from here, we might see a reaction and probably we can have a push to the upside. So this move has happened and it was actually quite good, and we were able to capitalize on it. So yesterday's candle, as you can see, the candle came and mitigated Wednesday's candle, 50% of it, and even dropped further. Okay, so what we're expecting today with this kind of reaction, we might expect the market to come and mitigate. Also, this week, then we might see a drop altogether. But today's on Friday. Fridays usually don't offer a lot of volume or volatility. So Wednesday and Thursday, this is when we had the continuation of the bearish trend, and we were able to capitalize over on the same. When it comes to the H4, we can simply see that the analysis that we had yesterday on this POI, I'll come to it on the 1 hour. It's actually an FVG. The market was able to hold it and the market dropped. Then we're having some retracements that are happening over here. So when I come to the 1 hour, this is what we had. There was a demand, there was a supply zone that was seeing that it might hold prices. So this is what I had over on Thursday. The market was around here, cleared away Asian low. Then the market came back to the Asian high and took out the Asian high. Then we had a lot of spikes that were happening. I believe there was one there's one member of the FOMC committee member that was speaking. I guess so. Dean, you're going to confirm that with me. Okay, and this is when we had a lot of spikes. I hope that's true, Dean, if you're still here. Because Dean is one of our fundamental analysis. Dean, if you can talk, please, you can confirm that with me. And this spike was actually, we didn't expect this. So the market pushed even higher. The market came down, pushed even higher, came back to this area, then decided to drop. So if I would have marked out this area, this was a good candlestick that actually pushed the market even lower. It happened during the London silver bullet session, and we had this drop. So the market opened with a gap, and now the market is actually mitigating, pulling back to this imbalance just to fill it up. Then we might see the continuations of the drop. So today I'll just be observing price action. I won't be trading actively, but we might get some good trades also today after yesterday's price action. Okay. Okay, I was asking yesterday with the fundamentals that were happening and the dollar spiking, who was responsible for this spike? Was it a member? I saw you had posted that. So utatuambia who actually that person was. So you can confirm with me because I usually see you posting those fundamentals. So this is what we had. So I'm still having the bearish trend. When we take out this Asian high, come back to this particular area, we can have what we call lower confirmation setups or entries at that particular area, so that we can continue with the drop altogether. We can target this Asian low as we continue going down. Okay, so that's what we had. From there, then let me just also share this link also together with the team. I'm seeing there's a possibility that they might also benefit over on the same. Give me a minute. Okay. That's perfect. That's done. Then I will break down Euro USD. I will start with we see what we had yesterday. All right. So this is a classic example of a market that was bearish, then turned bullish, and then we are going higher. But we are going to have a lot of stumbling blocks over in our zone. So this was a classic move. Monday's candle opened. Okay, there was a possibility that we were seeing a CRT, but it was not a complete one. We didn't have this high being taken out, but Monday's low was taken out by Tuesday's low. Then from here, we had this good CRT move now. So this is going to be our CRT low, CRT high. You can see it was complete, and the market even pushed even higher. So this was a classical move that we actually saw right here. So from this low, when the market swept this low, when an old low has been taken out, and we see a big push to the upside, and the market actually closed with a big rejection from below. The market even pushed higher. I'll have capitalized on the same. So the market currently it's on a bearish FVG, but I'm seeing a scenario where probably, just probably, we can this bearish FVG won't hold prices, and the market might even push even higher. But today is on Friday. Remember, today is on Friday. It's actually not a good day actually to be aggressive in the market. Okay, this is a good day that I usually used to do a lot of journaling and to do a lot of what we call a weekly recap, how I took my trades, how much I was able to make, some emotional what do we call them, challenges that I faced during the market. So that's what I usually check most of the time. So I can clearly see that this H4 FVG was filled. Okay, this was where the market was interested in before the market decided to push even higher. So this FVG worked out quite well. I was looking on a zone that probably we can come all the way to this demand area. But on the H1, I was having an opportunity, but I was actually I didn't enter this market. I just shared this opportunity out with you guys. We had a 15 minutes OB, but I see this market was not interested in this. It was interested in the H4, and you can clearly see that it came back and actually mitigated it. So for now, what we'll do is we just delete all this. We have clean setups and markups, then we see what we have. So we have this zone that actually happened here. And if we are looking for more bullish continuation, we can look actually out for them on this particular area. So these weeks, okay, they have already been mitigated. We can clearly see a mitigation of these particular areas. Then from here, what we expect is this market to come back to this zone. We're having a good imbalance that is actually here. Okay, this market has to come clear away this imbalance, and probably, just probably, we can have a good entry on this particular zone. We can have a good entry from this zone. This is a good demand that actually has an imbalance. Okay, the only problem is it didn't take out this high. Okay, but nevertheless, that's what we can have for today. If we can have a push to the upside, if I was to take this trade, I will take it very simply this way. My stop loss will be below this low, and I will target the high that was yesterday's high, which is a previous day high, and that is going to be my external range liquidity or my drawn liquidity. So this is what we can have. So this is a classic move from internal to external range liquidity, an imbalance that is actually here. But what I will do, I will have to get my alerts on. Once I see confirmations, we can get in. But if not, this can act as an inducement where the market can likely come back to this previous demand area that I had, okay, because it might, okay, it might. Let me just check it on the 1 hour so that we can see on a higher time frame. Yes, so probably, just probably, this can still hold, but because today is on Friday, this area can actually hold. We can push to the upside. Okay, we can target this Asian high if you don't want to be in the market for so long. Okay, you can target this Asian high, but when you target this Asian high, you'll need now to refine your SL so that at least you can have a good risk to reward. So if this zone can hold, you can get in and hold that price. Okay, so this is Euro USD. Then let's check on GBP USD. Yesterday we had bank rates that were released for the pound, and they came out positive for the pound, and we were able to see lots of pound pairs such as GBP USD, GBP JPY, GBP CAD, GBP AUD pumping even higher. Our zones where we wanted to check for more buys, this was where my eyes were at, was not triggered, and the market decided to fly away without me being in. So this is GBP USD. Let's check it out on the daily time frame. So I can see Nick Trades is in. Nick Trades, karibu sana. Thank you for being part of us. So I'm just finishing on GBP USD. I talk about gold, then you come in. All right. So thank you so much. So this is GBP USD. As I had told you guys, this was a daily demand zone that I'm seeing. That I had told you that I was expecting this zone actually to hold. It held prices, okay, even higher. Whenever you see a sweep, then the market reacts vigorously. Just know this market is going to be strongly bullish, and this is where I'm expecting this market to go all the way to. And you can see yesterday's candle how it closed strongly bullish, and I'm expecting the market to continue with a bullish run. Okay, this is a supply zone. It might hold for some few pips, but it's going to be mitigated, and we're going all the way up. Okay, just know that we're going to go all the way up after yesterday's bank rates and policy rates that were released for the pound. I'm seeing a likely scenario where this market is going to go all the way to the external range liquidity price at 1.37873, and that's my target on a higher time frame. When I come to the H4, I can clearly see that this market is also bullish. Whenever you see bullish PDRAs are being respected, such as this H4 FVG was mitigated. From here, we had this demand area. I'm not quite sure if this market can come all the way back here, but we're going to see on lower time frames what we have here, so that at least we can push to the upside so that we can go all the way up. Okay, so this is a supply zone, but let me just refine it there. So we're going higher. So let's see if we can have a good price action over here, okay, so that we can have those continuations of the buys. Please be alert if you see my screen not being visible or if I'm breaking, please alert me. You can go to the comment section and also alert me over on the same. So what we had yesterday was clean. We had a lot of accumulation that the market pushed even higher and pushed even higher. So what I'm seeing today on the H1, okay, all this is liquidity, probably has to be taken out. This was my last area where I had my eyes on. This was more liquidity, this is more liquidity. So probably, just probably, this entire zone. Now, the only problem is I'll be having a very big zone for the biasness for the buys. But if I probably can just refine it, probably this particular area on the H1, just before we had this impulsive big push to the upside, okay, our target one will be this area, then target two will be this supply zone on the higher time frame. Let's come to the 30 minutes. We check it out, okay? So I'll be having my eyes on this particular area. Okay, all this will be liquidity. So for now, this is what I had yesterday. It didn't work out. Once you see your markups didn't work out quite well, what you do is just delete them, okay? And you go and see where the market is actually reacting to. Have what you call a trader's instinct. Once you have it, it's going to be much easier for you. So this is going to be our first target. All right. Then all this is going to become liquidity for us. All right. So this is going to become liquidity. So trading is not actually that hard. The only problem that we do is probably we over risk. All right. Then we can have and over trading, and also having what you call a daily. I had someone saying they usually have what you call a daily target. Having daily targets actually not ideal, because in the markets today we lose, tomorrow we gain. Okay, just go day by day. As long as you are risking the same risk, probably 1-2% per day, and your target is around 4R, 5R, keep on doing it every single day. You're going to see results. So this is what I'm going to be having my eyes on. If not, probably this market can come all the way down to this area. So I'm going to be having a lot on 1.33798 zone. So this is GBP USD. It's a cool, clean price action. If I come all the way to 5 minutes, we see if we can be able to get sells, okay? Because you guys know how we usually trade. Probably if this market can come all the way to this area, we can have more selling taking place. This is going to be an ideal area, but now the sales are not ideal for me. I won't be focusing on those sales. So today is on Friday. Please, the money that you have made the entire week can be wiped out on a single day. I usually don't trade vigorously on Friday until I get a good opportunity. So this is GBPUSD. I'll be having eyes on this particular area. Okay, I might be wrong, I might be right. I am not perfect. I am not a market maker. I'm just a trader with some few years of experience, and I'm just speculating where the market can actually react from. Then this is the last pair which I'm going to do, which I know you guys love it. We are 19 of us. That's good, not bad. All right, before Nix comes in. So gold has been so bullish. Don't worry about my markups. These are psychological zones that I usually mark it out. And we were able to capitalize on gold buys yesterday, and the market has been bullish. And we thank God for gold for actually giving us some opportunity over yesterday. As much as we had some bit of mixed price action, but at least we were able to capitalize over on the same. So yesterday it was bullish. Okay, what I'm seeing likely scenario currently the market opened, it's turning out to be bearish, but don't worry about the bearish trend. We might see more buys happening over here. This can act as an OB on the daily time frame, so that at least you can be able to push higher. So if I am supposed to trade today, I might be checking on gold and some few JPY pairs such as GJ. So this is what I'm seeing, a likely scenario where this market already it has come back to this OB on the daily, and we might be going higher. That's on the daily. When we come to the H4, clearly this price action actually was not ideal. Yesterday you can see how the H4, we had an entry here, the market pushed higher, came back. Okay, we had mixed reaction, but I'm happy for those traders who were able to hold this trade. It was chaotic, and if you didn't be, you were in profits yesterday. And I'm seeing some few people who are not in, they were able to make a lot of money yesterday, so they are not in. But either way, so this price action was not clean, but I'm still expecting more pumps to come in. Okay, we can see this candle. This is the candle that had a sweep and it closed with a very big rejection from below. I'm expecting this H4 candle to come mitigate. Probably we can have an entry on lower time frame on this particular area. So let's check it out on the H1. We see what we have. So we have the Asian low being here. That's good. This is where we had our buys from. I'll just explain in a few. I'm just trying to see where we can get some entries from. So this candle actually happened during New York session open. It was a silver bullet candle. We're going to see if this market can come all the way down here. We can have some buys over on this particular area. Okay, between 3380 and 3374. Let's come to lower time frames to see what we have. So this was the buys that we had yesterday with the private community. We were checking on two zones. The first zone, let me just come to the 15 minutes, you guys to see clearly. So the first zone was this zone. Yesterday during just after Asian session was closed, the market pushed higher. It decided to fly away. Okay, then later, just during London session also, it gave us this big pullback, and there were risky buys because I was seeing a scenario where this market can take this low out and come back to this particular area. We have more push, but I decided to get using a one entry. I used a small lot size, it was a 0.05, but on this particular demand area, was where I was having more buy limits because I was sure that this zone could hold prices between 33.70 and also 33.65. So I had more entries over on this particular area. But this market decided to push high, came back, swept this low. We had a SL scare, but I told the team just to keep on holding. The market pushed higher, came back, retraced. I had another entry here on another account, pushed higher, came back. Then we had news at around 5 p.m. We had news 5 p.m. yesterday that actually was not very ideal. The market pushed, came back to our entry. The good thing is I was on a call when this was happening, but I decided because I had other buy limits that were actually here. If I was taken out, there was no problem. But the market decided to push, and when it pushed even higher, the market retraced back, gave us some bit of some scare, but eventually before midnight, the market pushed and went all the way to full TP. I always say that traders who are able to hold trades for some time, they usually can make a lot of money. They are always going to be placed handsomely. So this is the candle that I'm actually checking, this silver bullet candle. Okay, this candle that is actually here. Let me come to the 5 minutes. I see what we have, not ideal. Come to the 3 minutes, actually also not ideal. All right, then 1 minute. The only problem with 1 minute, I'm going to be having a lot of a lot of things that are going to be there. So what I'm seeing, likely scenario, let me just use a different chart provider. Okay, this was the secondary entry that I was checking out, but actually didn't tap us in. What I'm checking is a scenario where this market can come back to this zone. Okay, I know it was mitigated, but probably it might come back to this particular area once again. I know there's a mitigation of this candle, but we might see this market coming back in, probably sweeping this low before now we push to the upside. That's the first scenario, because I usually love entries where Asian low or Asian high are taken out first, comes to a demand zone, then it might push even higher. So if this market can come back to this area between 33.78 and 33.72, we can have more buys coming in over on the same. But it's likely also to check out this zone. Okay, it's just within the Asian session. Also, let's check it out. But let's see what London has to offer. Just probably this market can decide to come. Okay, can decide to come all the way down the area that is going to have been left out, just like yesterday. We might have this drop, then New York, we might even push even higher. So that's a likely scenario that we can see. So today, let's just observe the market and see what's likely to do. But I'm still expecting bulls to take control and push the market even higher. So until there, please, if we are following and you are still in this session, please react if you can be able to react. Okay, and if you see if we are together, please react and show me those likes. There's an area where it's written reaction. Thank you so much. I see you guys reacting. I see we're on the same page. So before I invite Nick Trades to come in, Dean says Fed speakers will gather attention. I've been mounting speculation that central banks may trim interest rates in September. Okay, so probably that's why we had a lot of reactions on DXY, and also that's why we had a lot of scare on this particular area. So Nick Trades, I hope you are ready and you are also in the meeting. Good morning, Nick. How are you doing?
Morning Benji, niko poa sana. How about you?
Niko salama kabisa. Please, we are late kidogo, but I
Yeah,
see
yeah,
you are in. You can get started. Let me see if I can be able to make you a host so that at least we can be able to be together.
yeah.
See if you can be able to share your screen.
Guess I can now be able to share. Let me see trading view. Yep. You guys can see it.
Okay. Okay, so you can share. So let me introduce you in a special way. So Nick Trades is one of the good traders we have from Nairobi, Kenya. He has been in the game for quite a number of years. He has been able to mentor a lot of traders. He holds expresses. That's why I came to learn about him. He came over to Eldoret, I guess in March, if it's not in February. And that's when we were able to meet up with him. He's a good trader, pro farm trader, even a live account trader. He has been able to mentor so many people. And I love working with him. He's one of the greatest mentors here in Kenya. And probably you know him or probably don't. But welcome, Nick Trades. Calls himself Nick Trades from Nairobi. Karibu sana, Nick. You can take over.
Asante, asante. Also doing some great work with your team.
Thank
Keep
you.
it up. Keep it
Thank
up.
you. Thank
I'm
you.
quite happy for all of us winning, and the fact that you love to work around with other mentors and other communities. That is something that is so rare from many people, because most mentors out here will think like it's a competition. Well, in real sense, it's not a competition. We are just here, maybe offering one service or another. But the goal is simply to make money out of trading and to help others make money out of trading. And it's not everybody who can do whatever Benji is doing. Showing up in the morning to do whatever he has been doing with you guys. It's not every other mentor who is going to be doing that, even if you have paid. Okay. There are guys who are out here, mtu anakuja, unamlipa, and then the guy disappears, right? And that's the importance of of having a mentor who is available for you. That is the most important thing because most people will go for these big online mentors. You pay them huge amounts of cash, but eventually you end up like getting no value for your money because that person is always busy tu anakuambia tu kila saa ako busy and yet you paid for the service. That shouldn't happen. So keep up the good work that you are doing, Benji. And for the members in here, I'm hoping you're all doing great and having a good morning. Today's on a Friday. Hoping the week has been good to you guys. Yangu haijakuwa mzuri sana. As you can see on my screen, I was focusing more on the dollar. I trade the dollar and of course the GBPUSD and Euro USD. So this week we are having quite a ranging market from Monday to around Wednesday. And hapo that meant that we didn't have many. We just had like less trading opportunities. And one thing that you should always understand when you're trading a ranging market is that the common saying that bulls make money, bears make money, and then pigs get slaughtered. Okay, so whenever we are in a consolidation, this is the pigs. The pigs are going to get slaughtered. Okay, the same goes down when you are expecting major news to be released. Okay, we're going to get prices getting into a consolidation before the release of major news, and that's why also before the release of the major news, you also say pigs are going to get slaughtered. Why? Because you are already trading in a consolidating market. So bears make money, bulls make money, pigs get slaughtered. So it's not a must for you to trade when, especially whenever you have a very ranging price action. It's better for you to wait for such. You can see now eventually we had this buy move coming in, and this is now what should be giving you an opportunity to engage into the market. Now, I believe I'm dealing with people with some experience in the market, and therefore, you guys, you don't have to go through the basics and all that. Therefore, I'm just going to be teaching two things into this lesson, and these are not new things. They are things that you already know, only that I'm here maybe to insist or present them in another manner. So I'm going to use a different chart to what I'm using. My trading style is more of what Benji also trades, smart money, of course, combined with a little bit of ICT here and there. ICT traders mko hapa na mnapigwa sana bantas because of your trading style, especially on Twitter. But as long as you're making money out of your strategy, that's what matters, okay? You should as long as you have learned maybe ICT or SMC, you should now work around your system to make sure that it fits you because there are all different type of traders. You can be a day trader, I am a swing trader, okay? And there is a scalper also in this meeting. Therefore, if you learn a strategy, and you learn from somebody who does the trading, of course, he's going to give you tips and he's going to show you how the strategy works when it comes to day trading. Okay, so it's now you to go and do your 2 3 things up so that strategy can now fit your style. Because what most people do is we copy and paste strategies. Okay, but at the same time, you're just copying and pasting a strategy that works for another person, but for you it may not work for you because again we all have different personalities. Kuna wale watu scalping will favor them a lot. Kuna watu watakuwa favored sana na day trading. Kuna watu wenye hawezi process vitu mbio sana. You can process your losses fast, you can process your profits fast, and that means the type of trade that may favor you is swing trading, whereby even if you take a loss, you're going to take a day or 2 days before you get to that trade, and that means you're going to be able to process whatever went through and go through over it. So what I want to insist on this lesson is 2 things, and I'm going to start with the first one, which is time and price. If you look above here on my screen, I have written here time and price. And again, if you look at trading view, we are trading on the x-axis, we have time. And then on the y-axis, we have price. right? X-axis time, Y-axis we have price. So what does this mean? That we trade a graph of time against prices. That's how we trade a graph of time against prices. Therefore, just like we are taught back in in school, if you are trading a graph, or if you want to come up with a graph, in most cases, we had to look for values on the x-axis and match them with other values on the y-axis. So that now you could meet somewhere, right? Now, this is what most traders ignore. You ignore that at the bottom of this graph here, we have time, and you only focus on price. This is the most common problem. You ignore time and you focus on price. Now, you just annotate some small notes happen. I'm saying it's not something new. It's something that you guys already know. But I'm very sure some of you, even if you know it, you don't really follow it. And we want you to start following this from today. So time and price. So you're trading a graph of time against price. X axis, we have time. And then on the y axis, we have price. Y axis, we have price. Mimi ni mwalimu, by the way. I'm a teacher of mathematics and business, although I have never taught in a school. But I graduated and got my degree from hapa UN. Yes, so I should be teaching. That's why naona labda naleta mambo ya walimu hapa. Okay, so just understand. So x-axis time, y-axis price. So for us to trade efficiently, these two, they must meet somewhere. Okay, time and price lazima zikuje zipatane mahali. You see, these two, they must meet somewhere so that they can give us, good trading opportunities. So let's focus on time, and then we are going now to go to price. So time. We have how many major sessions? We have three major sessions. Three major sessions. And these sessions, again, you all know them. That's why I'm saying this is not new to you guys. So we have three major sessions that we look to trade. And most of us by there in East Africa, we guys should consider ourselves very lucky because we can trade most of these sessions. You can trade Asia in the morning, you can trade London in the morning, you can trade New York. Lakini mtu wako US, most of our friends when wako huko, they really suffer because they can't really trade, hawezi trade, especially London, pia lazima amke mapema sana, Asia pia. So we should consider ourselves very lucky. Haya, so three major sessions. One, we have the very first session of the day, Asian session. Asian session. Some people actually hawajuagi when this session starts and when they close. Please let me see on your comment section. When does Asian session start? Alafu tuende kwa London. When does Asian start? Usisikie, don't even fear kusema jibu yenye maybe unaishuku. Just say. Let's see. When does the Asian start? You guys can comment, no? Message
Yes, you can
probably.
comment on the chat section.
Yeah.
Give the timing using Kenyan time, eh?
Kenyan time, yeah, East African time.
Mm.
Haya, Dean has answered. Na kila mtu achangamke kama Dean. Can see Dean has been commenting. Ngala pia, nice. Haya, so 3 a.m. in the morning. So that's Asia. Actually, you should be having some indicators on TradingView to show you these sessions. You don't have to really, you know, do this on your own. 3 a.m. Haya, when does it end? Asia, in the morning. When does it end? Let's see. Starts at 3 a.m. in the morning. When does it end. Let's engage. I'm very sure kuna mtu ajui hapa. You have just been trading blindly. 3 a.m. to what time? You see, some of you are guessing. Is it 8 a.m. or 9 a.m.? Let's see. 3 a.m. to saa ngapi? 9 a.m. Wycliffe amepata hiyo. 3 a.m. to 9 a.m. in the morning. Okay. Haya. Then between Asian and London. Okay. But let's first go to London. Then nitarudisha hapa nyuma kidogo. So London session nayo inaanza saa ngapi? Hiyo kila mtu anajua. Right? Hiyo kila mtu anajua. You can just comment it mbio mbio. London session. London session. Ah, nice. 10 a.m. in the morning. Haya, kuna mtu angesema 9 a.m. Haya, 10 a.m. and goes down for the is it 8 hours up to around 6 p.m. right? Yes, guess it's up to around 6 p.m. Not very sure, but you see, uh, what happens here and when these sessions are opening, we are trading currency pairs. That's how. So we are trading economies of different nations. Just take an example of our own, our own country here. Okay, when does the business start in our country? Business hours. Ukitaka kuangalia our business hours in our country, just look at when do the banks open. Okay, banks are, one of the major participants into the FX market, right? They do trade. So when will they start their business day? It's at 8 a.m. Every country, 8 a.m. in the morning, hapo ndio siku huanza. Na hii siku itaisha saa ngapi? Bank watafunga saa ngapi? 4 p.m. in the evening. Okay, so that's the same thing unaona. London session huko London, it's 8, their own 8 a.m. So sisi tunakuwaga 2 hours behind London session, right? We are 2 hours behind London time. Sometimes 3 hours behind, depending on our daylight savings, okay? But 8 a.m., 10 a.m. our local time is 8 a.m. The UK time. That's why we are talking of London session now starting at this time to this time, okay? New York session, which is the last session of the day. So meaning this is their business day is going to be starting at 8 a.m. their local time. Okay, and their 8 a.m. local time in New York, it's around 3 p.m. local time. Sometimes in a Kwaga 4 p.m. here. Again, depends on daylight savings. So 3 p.m. And this is the last session of the day, which goes down all the way to around, let's just call it 12, is it o'clock huko usiku? Okay, 00:00 hours. That's the last session of the day. Then we also have one more here, which is part of New York, which is what you refer to as the New York stock market. When does the stock market open in the US? Let me see. The stock market is different from the FX market. When does the stock market open? New York. New York.
Hapa sasa
72. Yes, New York time.
hapa sasa ndio utawapata sasa vizuri sana. This is something I had mentioned some few weeks ago.
Let's see. When does the stock market open?
Tunaona watu ambao wana Google na wanatumia ChatGPT.
Ngala. 4 p.m. Okay, okay. Haya, this wanacha basi niwaambie. This stock market here. Dean, hapa pia naona uko nje. The stock market is opening at 4:30 p.m. These are our own local time, 4:30 p.m., which is their own 9:30. Okay, hiyo ndio masaa ya stock market kufunguka. So hapa you can easily trade the likes of Nasdaq. Okay, indices pia unapataga, and the futures are going to be very very much active during this session. Sasa, so sio 4 ni 4:30. Enda kwa chart yako leo, angalia Nasdaq. Okay, just go and backtest and see when does Nasdaq move sana sana. Okay, the S&P 500 pia, when does it move sana sana. Okay, so people who trade Nasdaq and the S&P 500, the same to US 30. you guys will go to trade US 30 when the New York session has opened, okay, thinking that it should not be moving. But New York session open, yenye itakuwa ina move sana sana is the currency pairs. And that's why unaonaga 3:30 p.m., especially if you have any fundamentals coming out, the FX market is going to be very, very much active. Okay. Then ikifika for 30, actually there is a friend of mine who only trades for 30. This open peke yake, the stock market, and he's doing amazing. Yeah, siku mzima ako free. Ikifika 4, hapo ndio anaanza kuprepare by 4:30, whatever happens, he has a strategy that he uses around that. Haya. Now, so now you guys know the major sessions when they're starting. Okay. And now time is really important. If you want to solve half of your problems, or 80% of your problems that you are going through right now as a trader in terms of technicals and also in terms of psychology, just consider this: the time. Okay. Note which pairs are you trading again. So for the Asian session, what do you expect to be trading during Asia? If you are going to be waking up very early in the morning to trade, I personally have never done that. But I used to do that to kuwa beginners penye unapata uko very excited about the market and you are going to be waking up so early so that you can try to catch a move, especially even on Sunday when the markets are opening. So in the morning during Asia, you're going to be dealing more with Australian dollar pairs, okay, because we're talking innovation session. So pairs like Audi CAD, Audi USD, those pairs with the Australian dollar, they're going to be a little bit active during this Asian session. Then you have London. Here you're going to focus more on the UK pairs, okay, the likes of GBP USD, simply GBP, the pound, GBP USD, GBP JPY, also USD is very much active also during London, okay. Therefore, these are some of the pairs that you can trade during that time. You can put GBP and you also put the Euro. You can also trade Euro pairs, Euro USD, Euro CAD, higher. And then we have New York session. So New York, this one hapa kila mtu anajua that you're going to be focusing on the US pairs. And this means that anything with USD, you're going to be focusing on it. And also anything with CAD, Canadian dollar, is also going to be very, very much active during this session. So USD CAD, Euro USD, GBP USD, USD CHF, CAD JPY. Okay, though I don't trade such pairs, I just focus on the majors. Higher. Then hapa chini sasa, New York stock, you can trade the stock market at the same time. So sidhani hapa kuna trade stock sana. So you guys are going to be focusing more on the Nasdaq or the US 100, and also you have the S&P 500, and also you have US 30. Yes, hizo tatu sana sana. But I'm sure most of you don't touch this sana. Nasdaq, the S&P. Yeah. So now we have the three major sessions. The Asian, London, New York, and also you have known about the New York stock market open. We have now noted the time that these sessions are opening. Higher. Now, next thing, volume. When do you have the most trading volume? When do you have the most trading volume? The most trading volume will come in during at least, okay, at least the first 2 hours. First 2 hours of each session open. So you're looking at when does this session open? And you're going to note during the first 2 hours of each session open, we are going to have quite a lot of volume. Considering now that most of us here do the trading, okay, most of us do the trading, we should take advantage and full advantage of these first 2 hours. Hii tu nimeandika vibaya. but no problem. You guys understand. Uh, so during the first 2 hours of each session open, you're going to see quite a lot of volume kicking into the market. If it's London, ikifika masaa ya 10, okay, that's when you should be on your charts. And that's why I'm saying if you not only consider time, you're going to solve most of your problems as a trader. Because some people are facing a lot because they wake up so early to trade. They trade even late at night trying to catch some moves, and you end up getting yourself into a dead market. Okay. But if now you consider time, the first 2 hours of each session open, that's when you're going to see most volume coming in. And that's why you're going to see even if there are news scheduled, those news are going to be within that time. And they're going to be within this period of the first 2 hours. Let's take an example of New York session. New York session ikifunguka 3. When do most news come out? It's at 3:30, right? Therefore, and one thing about the news, I don't focus more on the fundamentals, but one thing we can be assured is that news will never change the direction of the market. Okay, inakuwaga too short term. You're going to have like NFP, and if NFP, for example, was coming out whether positive or negative for the dollar. If you look at the charts, technicals, sana sana, this news will have two objectives. They'll either go to areas of liquidity and do a sweep, or two, go to areas of imbalance price action, because that's the two objectives of prices. Inakuwaga two with only two objectives. One, go to areas of liquidity. Two, go to areas of imbalance. This is something that we should write here because it also comes down to time. So price will have two objectives. And this is always, you're going to see prices with only two objectives. One, take out liquidity. Two, fill imbalances, or what you can just call rebalance. Okay, they're going to be taking out liquidity, and two, they're going to fill the imbalances. Therefore, this means that you have to know where the liquidity is. Okay, teach your eyes and train your eyes to see why is the liquidity in this market. Always ask yourself that question. Okay, where is the liquidity? Because prices are going to be moving towards those areas of liquidity. Benji has taught you guys on identifying liquidity. You can be able to identify even inducements. Okay, you can be able to identify equal highs, equal lows. Okay, session highs, session lows. You know, trend lines. Okay, you can be able to identify all that. Now, if you take a close look at this liquidity combined with time, they go hand in hand. If you have some equal highs being created, or let's say we have a ranging market, what does a ranging market do? Like this week, we had a ranging market from Monday to Wednesday, on Euro USD and GBP USD. A ranging market will be engineering liquidity, right? Engineering liquidity on the buy side and also engineering liquidity on the sell side. Let me do it here for you guys practically. So we have such kind of a market here. Prices hazisongi sana, okay? And even before we go to this liquidity, and in relation to whatever that we are talking here, we have that it's a ranging market. When do you normally see a ranging market? When do you see a ranging market? Boom, comment hapo. When do you see a ranging market? Two scenarios. Just give us two scenarios of when you have a ranging market. Because all things that happen here on the charts, they're never random. Okay? They're never random. It's all algorithmic. It's all scheduled. Ni mchezo hapa tunachezaga. Okay. But when do we see a range in market? Because this is what we refer to as the liquidity build-up by the smart money. Uh-huh. Very nice. Dean has answered before news, and that's one correct answer. When is the other scenario that we see a range in market? Just comment here. The other scenario when you see a range in market after an impulsive move, very correct. Angalia kama after NFP last week, what happened? After every impulse, you're going to see a range coming in. Okay, and that's what we refer to as a liquidity build-up and all that. Then that scenario, let me answer it for you because of time, is whenever we are having a dead market or when the session is over. Okay, and especially we said this first 2 hours. Angalia kama London. When do you have the most moves coming during London? Itakuwa between saa 4. Ikishafika huko saa 7 ya mchana hapa Kenya, you are not going to be seeing any significant moves until now the next session comes to open. But sometimes we get some moves, but in most cases, the best moves are going to be happening during these first 2 hours. We are on a ranging market. Okay, let's assume this is Asian session. Okay, this is Asian session in the morning. What do we have here? Liquidity on the buy side and liquidity on the sell side. Okay, liquidity on the buy side, liquidity on the sell side. We have said here prices will always have two objectives: take out liquidity, two, fill imbalances. So when the session opens, and now here, this is where time comes in. We are going to have a ranged market like that for some time. But then we are going to see the impulse coming in at a very specific time of the day, not in any time. Kama tunaona hapa impulse, you're going to see maybe prices coming during London and then boom, a move goes down. Okay, you see a big move going to the opposite direction. Where? To the sell side liquidity. Okay, a big move hunting the sell side. It could either be a liquidity hunt or what you call a sweep. Watu wa ICT wataita tata sweep. Sisi watu wa smart money is just a liquidity sweep. Okay, you might see a sweep. Let me give an example here of a sweep. Some people don't differentiate between a sweep and a structure break, or a structure continuation. If we see something like this happening, prices going up, okay, just above these highs, and then they don't close above it, and then now we see another impulse going down, then this is what you're referring to as a tata sweep or a liquidity sweep. You can just mark it here. Okay, because prices went higher. Yes, prices went higher and didn't close above our equal highs. I mean, yeah, they didn't close above our equal highs. We just see a week. If you ever see that in the market, and especially during session open, if this happened during the first maybe 2 hours of that session open, this could be a good signal for you to take your sales from here, because prices had just one objective to the buy side, take out the buy side liquidity, and then depending on the structure, if the structure was bearish, we continue with the moves. So this move is never going to be at any random time. It's going to be at very specific times of the day. London session open, New York session open. Higher. And then what we see is a very big impulse again after prices take out liquidity or when prices are coming out of a zone, we are going to have quite a big impulse. Quite a big candlestick coming down and maybe breaking a structure and all that. And simply, this is now what we refer to as the order block, right? Whenever you see these big candles, that's the order block they are created. Then what do we see in most cases? After a big move, we are going to see maybe a small consolidation and then prices starts to retrace. Well, retrace in why? Because of the second objective of these prices that you have said. So the first objective is always to take out liquidity. So where jua liquidity iko wapi? Okay, buy side and sell side. Two, fill imbalances. So after a very big impulse, what do we normally see? Prices will start retracing. This forex market is the best market for me to trade because it really follows this. Ukienda pale kwa the Nasdaq and the S&P, Those pairs, you go look at them. What they have been doing since 2022 November, they have been buying with no good retracement. But the FX market is one of the most efficient market. You're all going to see after a very big impulse, you're going to see a retracement. Haven't you seen that this week for Euro USD and GBPSD? After the big impact during NFP, what was the next thing that was happening is to rebalance that big move that was caused by NFP. These prices must balance both buyers and sellers. Okay, we must all be balanced for us to be able to trade. For you to press a buy, there is always somebody on the other end who is going to be pressing a sell. Okay, that's how it works. For you to buy, lazima kuwe na mtu mwenye provide with the liquidity on the other end to make sure that your position is going to be filled. In most cases, it's our brokers who do that. Same to kule prop firms. That's what we refer to as B-booking. That's a question tunafaa tuulize brokers siku moja. Do they take positions opposite to us, or do they send our positions directly into the market? Most Kenyan brokers, not only Kenyan, but most brokers will be trading against us. But as long as if you trade and make money, you're able to withdraw. Then we don't really care about whether our positions go direct in the markets or the broker does be booking for us. I guess ni kama tu pale pro farms. So you guys are given demo accounts, and at the end of the day, if you are able to pass your demo and make a payout, you are going to be paid. So you don't really care. Haya. So first to us of the session, we have given a very good example. Price will have two objectives: go to areas of liquidity. Two, go to fill imbalances. Now we have covered time, okay, and then on price we are going to be covering it much more in the next unit that I'm presenting here. If there are any questions based on this, please ask. Please ask. You're going to see this more on the charts. I love doing it practically more than just giving this, but of course we need this foundation. If there are any questions, please, you're going to ask them on the comments. If you wish to take a screenshot of this, take it right now so that I can delete it and we'll go to the next thing. Okay, so hoping you have taken your screenshots so that I can now delete this. And there is a way you guys delete all the drawings on your hapa chini, isn't? Yes, remove. Now, the next thing is very new to all of you. Kama kuna watu wanajua, ni watu maybe 1% of you guys. Everything that we are learning here, okay, and these prices, it's all algorithmic. It's all algorithmic. And you're going to realize, some that I'm going to teach here, very easy. But you guys, I'm going to send Benji some materials for you guys to learn more, because this might be a little bit complex for some of you, especially maybe watu wameanza juzi. Angalia hapa juu kwa screen yangu 1, 5, 7, 8 or 9, 13 and 21. So what is this? We refer to this as a sequence. If you would trade this in ICT, if you look at the ICT's logo, anakuwaga amechora mavitu hapo zenye some of people don't understand, okay? But inside those drawings, there is a sequence that he has also included. And this sequence here is not something that he has taught sana on YouTube. I actually also learned this sequence from a private student of his. He's quite an experienced trader in Kenya. Been trading for more than 15 years. So he was a private student of ICT. Hapo nionika we got to interact with him, and we eventually got to learned this from him. And also on my end, I really embraced it because it really works in the market. So these prices are going to be moving in sequence. And you're going to be starting from right where we see an expansion. Yeah, right where, whenever you see an expansion, going back to our example where we said we have this ranging market. We have a ranging market like this one here. And what you're looking for in this case, our major focus is always going to be on the expansion, okay, where we see the expansion and prices breaking a structure or breaking out of a consolidation. Okay, it could either be just a structure break or a consolidation. In this first example used, let me just use a structure break because we have already used an example of a consolidation. So acha tutumie to a structure break. So we see prices getting something like this, and then you see a major structure there being taken out. So here we have a structure break, POS, and then we are going to be looking at where this expansion started. It started right here, and maybe ikaishia hapo, just an example. You're going to note something. Whenever you're having this expansion, what we are going to be doing more is I want you guys to start counting candlesticks. It might seem crazy, okay? But you're going to be counting candlesticks. From where we see the expansion hapa chini, you're going to name this as our candle number 1, okay? Whenever you see an expansion, the very first candle when your expansion ilianza is our candle number 1. Something that you're going to realize in most cases, we are going to go from candle number 1 to candle number 5 is going to be a straight expansion without any retracement. Itakuwa straight expansion, especially now if you combine this with time. Okay, it's going to be a straight expansion all the way to candle number 5. Or it's going to be a straight expansion all the way to candle number 7, 8, or 9. So personally, I use more of 7. I'm a 6. So candle number 1 to candle number 6. Okay, candle number 1 to candle number 6 is going to be a straight expansion without any significant retracements. Then tukishafika hapa from candle number 6, you're going to note something. Candle number 7, 8, or 9. Okay, it can be either candle number 7, 8, or 9 itakuwa retracement. So let me fanya hapa. So candle number 7, 8, or 9 here, you're going to see, let's say we have one more candle. Somebody is using my account. Oh, pole for that. Haya, hapa tukishatoka candle number 6. Okay. This account nakuwaga nimeshare with a family member, I guess ni anajaribu kulogin aanze kutrade. Anaelewa masaa ni masaa ya London. I can tell kwanza tulie. Candle number 7 or candle number 8 or candle number 9 itakuwa a retracement. Okay, 7, 8, or 9. You can't tell which one, but I can assure you there is always going to be a retracement on these candlesticks. If you combine now this with whatever that we have learned about smart money, demand and supply, okay, wewe kitu utakuwa unafanya ni hivi. Kama ni unatumia 4-hour time frame, okay, or you're using the daily time frame or whatever time frame that you are using, it could also be like a 1-minute time frame. If you combine these with time, okay, and of course price, penye sasa price ziko maybe at an area of demand, you're going to see yourself getting very, very good trades. Actually, you can easily get a zero drawdown trade. Okay. Why? Because you're first looking at the sequence, and this sequence must match. Candle number one is an expansion. Let's talk of candle number seven. Let me do a six kwanza. Candle number seven is starting a retracement. Okay, you can get a retracement for these three candles, and that's why now you just get the logic. Munambo, a good retracement will be three candles to the downside. All right, so this is candle number seven, the candle number eight, and the candle number nine. So you can see something like this: seven, and then you have candle number eight, and then you have candle number nine, right? And then after that, we see maybe prices start to reverse, or just prices maybe continue the retracement all the way maybe to the area of demand. And we're going to realize again something. The next significant move, whether a retracement or a reversal, is going to be at the 13th candle. Candle number 13. Candle number 13 is what we refer to as a reversal candle here. So to make it easier for everyone, candle number 13 is a reversal. Candle number 7, 8, or 9 is a retracement. Okay. Then candle number 1 is where we have the expansion. From 13, again, you can count all the way to candle number 21. But we mostly focus more on these candles between 1 to 13. Ukitaka kuendelea to 21, you can also count up to 21, maybe a reversal. But what we are talking about is we have significant candlesticks, okay? Significant candlesticks that will give us hints in the market of either a retracement or a reversal. So now if you combine this with whatever that you trade right now, smart money, prices for demand, you're looking to buy, and then now you can be able to count the candles, believe me, you're going to get yourself a very good winning rate. Let me take you to a chart. You're just taking a random chart and you try to count. So sisi tunatafuta kwenye kuna expansion. Sawa. Expansions, we will just look at where you have the big candles. So let's look at it. Let's look at this one here. We had an expansion, right? So this expansion started here, giving us a candle number 1. And then let's count again. So from 1 here, 2, 3, 4, 5, 6, 7, 8, 9. Higher. If you look at this, 7, 6, 7, 8, 9, there were some kind of resistance, and we had some buyers kicking in, right? But now, if you look on the left, if you had any area of demand to be trading from, it could only be this area. Okay, and we had some imbalance below, therefore you could be risking here to get some buys. So you must combine this with whatever that we are trading. We delete this. So here we had all the way to candle number 9, and then we had here consolidation. We had this here, which is a range. Okay, so in this sequence, again, not every sequence is going to be tradable. So, for example, you could see in this sequence here on the 4-hour, it couldn't be traded, and the reason is we didn't have any significant area of demand for us to initiate any buys, and you're heavily on a bearish market. What do we see again from here? After a range, then you had another expansion. So this expansion here giving us the start, the first candle, yeah, is giving us the first candle of this second expansion here. And then we got 1, 2, 3, only 3 candles. Okay, so again, see, in this case, hakuna sequence yenye match hapa. Let's go to this other side. We had this move all the way up. 1, this is our candle number 1, where we see the expansion. We have candle number 2, we have candle number 3, 4, 5, 6, 7 was a range. That's how. So again here, because we have a range, we have no significant thing to be looking for. So we could say this week was kind of a challenging week, ndio. But let's start again from here, where we see the next expansion starting and the next big candle starting. We have a candle number one here. This is candle number one, and then you can count and see. So you had 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 was a little retracement all the way from here, and then you can layer 10, 11, 12, 13. So if you look at the 13th candle here, which is yesterday's candle, I was looking at this, nilikuwa na monitor Samba's hapa. This is the 13th candle. Okay, so it's the retracement coming all the way to candle number 13, and then candle number 13 now pushes some more buys to the upside. Okay, and this buys now could be pushed all the way to candle number 21 and maybe taking us now to the next point of interest. That's how, because if you look at this, we have huge imbalance above, therefore tunaweza toka hapa 13 push out the 14, 15, 16, 17, 18, 19, 20, 21 tukuwa tunatradia huku juu. So in this case, the only thing that you will have traded here is maybe this 13th candle with a rejection to go higher from this area of imbalance. That's how. Let's look at different time frames, not only the 4-hour. Nataka tuangalie the different time frames that we have also. And our work is simply to look for where do you have the expansions, okay? Where do you have the expansion starting?
I was even to ask Kanik, what time frame do you usually actually use for those sequence?
Okay, so what I'm going to be doing more, I use the 4-hour so that, the higher the time frame, just like the way we trade normally. The higher the time frame, the better the confirmation, the stronger the confirmation. A confirmation on 4-hour is not like a confirmation on 15 minutes. 4-hour is always going to be stronger. So in this case, we are using the higher time frame, and then we can now match whatever you have on the higher time frame with the lower time frame, especially if we have a zone. Let me just take a replay. Let's do a bar replay here. And you're going to get it. Hii lesson mimi nilisoma within 30 minutes and I was good. Therefore, it only takes a lot of practice. So let's do a bar replay. It's more of a back test. And then you try to look for this sequence. And you're going to be using the 4-hour and the 1-hour. So let's go to, okay. This was 2019. Oh, this is daily time frame. Acha tuingia hapa 2024. Yes, last year a time like this tuko June, July, August. Yes, tuingia hapa. Okay. So this is EURUSD daily time frame. We are doing our normal analysis kama kawaida tu kwanza. What kind of market structure do we have here? We have a bullish market. Here we have a structure breaks. That's a structure break, and the next structure break is here. And these structure breaks are also the ones that are going to help you get where the expansion started. Yeah. So we have another structure break after hapo. We have also the most recent in here, right? This is on the daily time frame. We had this other one. And we got prices pushing up all the way. So this structure, the most recent break of structure, where did that move start? Okay, this move started right here. This is the candlestick that ilitupeleka juu mpaka tuka break that structure. So here is where our expansion started. So what did we see? We have this big candle number 1, and then you are now on candle number 2, candle number 3, 4, 5, 6, 7, 8. Okay, 7, 8. You can see the 8th candle here, a small retracement, and then the 9th candle is a bullish engulf. Therefore, that means you could be looking for any nini from there. But again, looking at the structure, you have this zone here that has also been taken out. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and here we are on candle number 10 now. So let's just name this. This is our ninth candle. So 8, 7, 8, or 9. You could see from candle number 1 all the way to 1, 2, 3, 4, 5, 6, 7. Okay. If you are having a trade, for example, running from here, you could easily hold that trade for at least 7 candlesticks. And remember, this is the daily time frame. You can hold such a trade for at least 7 candles. Okay, you can use this as a take profit taking strategy. Okay, you can use it as your exit strategy. Then unaangalia from where I enter the trade, especially if you're able to get a very good sniper entry. From hapo penye uliingilia, how many candles do we have printing on that particular time frame that you used to enter? So kama ulitumia 15 minutes, you're looking at how are the next 7 candles going to be printing on this 15 minutes time frame. Let's go down to 4 hours. So on 4 hours, definitely we're going to be having different structures. So we mark the breaks you have here, which is a structure break. And we have the next structure break right here. We have the next structure break. Now, looking at this, where the most recent structure break here on 4 hour, ndio hii hapa. And we have 1, 2, 3, 4, only like four candles to the upside. So in this case, no sequence is matching right there on 4 hour. Let's look at the hourly time frame. What did you see the very first candle? So we are not going to go down to any lower time frame. We're just going to be matching 4 hour and 1 hour. So here on 1 hour time frame, here is the last structure break. This is the very first candlestick that started the move up. You can see the kind of momentum that this kind of printed. So you have 1, and then 2, and then you have 3, 4, 5, 6, and the momentum umefika hapa kwa this 7. What do you see? A retracement starts coming in. 7th candle. So if you're able to get such a move again, okay, based on maybe you entered on the hourly, you could be very much assured that at least the very first 7 candles or the very first 5 candles where bado utakuwa kwa your trade. Okay, 1, 2, 3, 4. If you ungetoka na candle number 5, ungetokea hapa, and this could be a sniper exit, right? That is if ulikuwa umeshikia such a trade from such a zone. I don't want us to go down into very lower time frames. So I guess ni itakuwa ya mwisho 30 minutes. Let's look at it. 30 minutes, this is where that is starts. This is the very first candle on 30 minutes. And then candle number 2, candle number 3, candle number 4, candle number 5, 6, 7, 8, 9. Okay, so you can see hapa kwa nini kwa 30 minutes, we have our 9th candle in this one here, where the retracement usually starts. So you can see in this case, something here worked. Let's put this to the prices and just let's see. So as smart money traders, what would you expect? Would be expecting that the next zone prices would be reacting with is this one, and maybe to get more buys or the zone to be taken out and you get sales coming in. Very nice. So there we go. Prices coming down to this level. Let's look closely at this level. Okay. And we can also be able to count the candlesticks. So this here is a level of demand that would probably push prices higher. So this is like putting all other factors constant. For example, you can see here this could be easily this could easily be a liquidity zone, as you can see some kind of equal lows. So looking at the 4 hour, is there anything that matches to our sequence? Starting to count from here, we don't have anything that matches because this is 1, 2, 3. Nothing matches in our sequence here. We are looking at these numbers ziko hapa to 7, 8 to 9, 13, 21. So if nothing matches, you just leave it. Let's go to 1 hour and see if there is anything that matches. From where we see an expansion. So the last expansion here on the hourly, the last expansion should be starting somewhere here. Wherever you see the big candle starting. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 13 candle hii hapa hivi. 13th candle gives us a signal that prices might reverse. But again, we said we must consider time. Okay. And all of the factors that we usually consider must be considered. So if you look at this 13th candle, gave us signs that we might be going higher easily. And actually, this to me, this is a trade that I think I could have been tricked into. Why? Because this is a bullish engulfing candlestick, and this is at around 4 p.m. our local time. That's during New York session. So this could have easily been a trade for me with my stops slightly below the candlestick, and I look for my targets. First targets, we always look to target the low-hanging fruits. And in this case, there could have been a loss. Oh, tumeepuka kidogo sana. But again, now looking at this, if I get into a trade during New York session open, hii ni 4 asubuhi, I mean 4 jioni. If a trade consolidates at my entry for more than 2 hours, mimi nimetoka your trade. I can't hold it because if the session open did not give any momentum, then where do you expect the momentum to come from? Okay, therefore, this is more of a trade management plan. If you get into a trade and the trade consolidates at your entry for more than 2 hours, depending on the type of a trade that you are again, because this works more for day traders. Trade ikiconsolidate for more than 2 hours, wewe toka hiyo trade because hakuna kitu unangojea hapo. You just go out and wait for a better opportunity. Because if you continue to hold in this trade and now you say, oh, now it's going well, okay, you could wake up in the morning and you could see whatever happened, right? You are taken out aggressively. Why? Because again, look at this big momentum, these big candlesticks. What was the purpose of these big candles? So you just pointed out some liquidity below this, right? And you can see it has been taken out. Next point of interest would be, we have this here. And we had also this other point here, but I can see it has created some equal lows. Therefore, you can't really consider it. So now hapo you create some equal lows. So our next point of interest will be this one here. Let's see. Hope we don't miss this. Consolidations. We said consolidations are liquidity buildups, and then so prices imefika to a point of interest. This year was on a Friday. Do you really trade on Fridays, especially usiku? Because here you can see the prices imefika ni Friday na ni saa moja ya usiku. So we can't do anything, right? We are going to be waiting until the next day or the next trading week, and you can be looking at this zone Monday. Monday will start somewhere hapo. So Monday opens, that is Asia on Monday, and then Asia buys. So since we are going to be focusing more on London, so looking at the hourly, we don't really see any good expansion that you can use here to count the candlesticks. So let's just wait for prices to play out more. You can see the way Asia was and the way London is. So let's just look to see whatever prices will do. This is on a Monday. So this was a Monday which was not worth trading. If you look at all this was more of a range in price action, right? Therefore, it was a Monday that is not worth trading. So let's look at Tuesday. Tuesday inafaa kuanza wapi? Oh, ishaanza hapa. Yes, Tuesday started right there. Tuesday, this is Asia, and then here is London. We are still trading from the same area of interest. Prices have not breached the area. And now this is New York. Quite a choppy price action. Nice. This now you're getting some. The area is holding. So yeah, this area seems to be holding prices. So sisi tutaangalia, because the area is holding prices, we can now be looking for bulls from this area, right? So we have the expansion. How you see the expansion? It's right here. So we have this rejection, a very sharp rejection, and then you have this big candle right here. So we have one, okay, and then 2, 3, 4, 5, 6. So here we can be expecting 7, 8, or 9 can give us now the push to the upside, which is going to be also mapped to this area of demand hapa hivi, si ndio? Let's see if we get any confirmations, and the confirmation must also align with time. So here we are on 1, 2, 3, 4, 5, 6, 7. This is the 7th candle. Let's see how the 8th candle prints. Candle number 8, candle number 9. We can't really take bites because we have some imbalance below here. So let's see if prices manage to come back, and then we can do another sequence count. So trade missed. Prices retrace back here. This was quite a choppy market to be trading. This is August last year, and we still survived. Tujipigie makofi. So here prices are back to our entry. Now, something that we must always consider is, as long as we are trading this, okay, as long as we are trading this sequence alone, haiwezi work peke yake. You must consider every other thing. For example, above here you see prices just came and were ahead from this area of demand, I mean of supply, and there was just a liquidity sweep. So meaning, if the supply is in control, the demand is going to be taken out, right? And we can expect this. Let's see, this area, we can expect this area to be taken out. You see some inducements creating below equal lows here. Here we can expect a very big candle to the downside, taking out these equal lows. And there we go. Not as huge, but you can see there was quite a huge candle. And we said about time. When will this be happening? Not at just any time of the day. When did this big candle start printing? Here. It's around 3 p.m. On local time. Okay. That's New York session open. That's when you're getting this liquidity sweep. And then after that, we see retracements, and, the bears continue. Hi. On this now, what I will do is, because of time, I have to be somewhere by 11, but sio mbali sana, ni mahali ya 20 minutes or 10 minutes drive. What we are going to do is, we are going to organize with Benji, because we have not given. I have so many examples somewhere else. Okay, it's more of a journal. I'm going to be having these examples of real trades that I've taken, live trades that I've taken using this, and then I can use them to present to you. Because you could see, for example, in this kind of market here, this was the sequence was not, very much visible, because of course we had, quite a, you could see the kind of currency that you are printing right here. So I'm going to organize with Benji and have one more session, which is now going to be purely on this. Today we started more on the price, time and price thing, and then liquidity, some small on liquidity, something small on imbalances, okay, and the objectives of prices. So in the next class, we're going to be focusing purely on counting these candles, because I'm very sure most of you bado hamjaelewa how to count the candlesticks. But also, I'm going to send Benji some materials right after this, which he can share with you, and then mtazisoma. It's actually short videos on YouTube. There are about 5 videos which will be explaining this to you guys. So Benji, I guess I'm going to do that after this, share now, so that they can get more knowledge on the same. So that's when you're having the next class, which is purely based on this, it will be very easy for everybody to understand. And then I'll have my journal ready. So right now, siwezi access penye iko. My journal is going to be ready, and I'm going to be able to share that with you and show you how to count these candlesticks properly. It's not like we're changing the strategy, we're just adding more confluences to whatever that we trade currently.
Thank you. Thank you so much, Nick. If you are done, tuambie kama you are done or not. I don't want to cut you.
Oh, Mimi, I'm done from my end.
Right.
Maybe just to get the feedback from your team.
All right. Thank you. Thank you. As you're winding up, please wind up. Wind up. Seems you're not. You have not winded up vizuri, but as you're winding up, please let's give him the reactions, and so many reactions from him. We can get them also if you're still tuned in. And also you can comment if you're having any questions, please. I'll be reading some few comments or questions that we are going to be having. So give him his likes, pay his flowers. It's actually allowed. Give him his flowers because content is very important. We keep on improving our content. So those are your flowers. I hope you receive them.
Sure. So maybe I hope you guys have, enjoyed whatever that you have learned today. At least you have maybe got one or two things, and you're going to be having one more session, probably next week at a time like this, so that we can continue from where we have left. And I wish everybody a good Friday. I'm not personally looking to trade today. We're going to be resuming trading from next week. This week has not been the best, but all in all, we say capital preservation is the best. If you still have your capital, you still have more, shots to try to, make money out of them. But if you run out of money, then you're out of the game. Therefore, I wish everybody a good day ahead, and let's keep learning and don't block information, because most people will tend to block information, especially new information, because you believe whatever you have is all that you need. Okay, but even us, even with our experience, I love learning from others, because there is always something that you can learn from another person. So I'm done from my end, and it was nice having this session. I've enjoyed, and hoping you guys too have enjoyed. We're going to be meeting again in the next one.
Sure. Thank you so much, Nick. We're going to be having the next session probably Thursday or Friday, then the end of the week, just like today, where we can actually stay for longer, at least 1 hour and a half, and we don't steal or we don't buy time for trading. I usually love having these sessions either on Thursdays or on Friday. I love them having on Friday, especially Friday when people are relaxed, they have made their money, now they can tune in. They don't have the pressure to make money at the end of the day. So thank you so much, my brother Nick Trades, all the way from Nairobi. Let me share my screen. So it's Friday, and just to let you know, guys, we are recording this meeting. It's going to be on YouTube, on our YouTube page also. So it's a recorded meeting. Thank you, Nick, for having that. I hope you knew that. Or probably if you didn't know, we were recording this session. That's why we were using Zoom, not our normal Google Meet sessions. So if you missed out on the first part, you're going to get access to it. I'll share the link in a few once once the link is ready. Once I've uploaded it, I'll just share it so that you can go through it. And I'm seeing some few comments, people asking if they are able to get it. It has been fantastic from Dean, though challenging, but worth it. That's good. We should do this again and again. Yeah, sure. We should do it again and again. And we appreciate your time, Nick said. So we're going to plan something else also next week, Friday, the same session. And he will be able to give us more practical examples and also more sessions or more trades he has taken on his side. So this is a trade I'm just showing you on GBP, XUSD. This is gold trade. It has just missed some few pips. I was just sharing it with our members, where I was likely looking for the entry was actually a deeper area, but I see the market has reacted. This is what we usually call a decisional POI. It's a POI just above the extreme POI, and we can see it's moving quite well. So this was actually a move that I could have I could have traded today and I could have closed actually my day in profit. So in our private VIP community, because I'm so sure you guys are not there, I have shared some few setups over there for people to trade. I always do so. If you need to trade, this is a setup on US 30. I usually trade also US 30. I shared it over yesterday at around 7 p.m. This was an area that we were looking out for, and this is a setup that we were checking also. It actually performed well, and we can see the market from that POI decided to respect it, and the market is now pumping. And if you're able to catch it, we are in profits. Also, we have a USD card setup I have shared. I have shared also Euro USD setup. I have shared also AUD USD setup for those who trade the AUC, then GPP USD setup also. I've shared all the same. So this is just to guide you and also to be able to be in a position where you can be able to trade if you're trading on Friday and you're guided on probably the areas of interest I'm looking out for and where probably I might be expecting reactions from. So that's it from my end. Thank you so much for being part of this session and tuning in. We're going to have the next session next week on Friday. We're going to talk to him. He's a very busy guy, by the way. He's not someone who you can get him very easily, but we are delighted to have you also on board. Thank you so much, Nick, and thank you so much for the 20 plus of you guys who have been here. Just to mention Angela, Dorothy, Dean, Dex, HP, Ivy, Kevin, Meshak, MJFX, Ngala, Oppo, Paul, Susan, and Wycliffe, thank you so much for being here and tuning in. So until there, I will say adios from me. May pips be with you. Today is Friday. Make sure if you've made money, even if it's $10, even if it's $5, even if it's $50, make sure you withdraw some profits. Okay? It blesses the inner soul, the inner trader in you. Once you receive that amount, you are going to forget the emotional torture and the torture we had during when we were trading. Inafanyanga mtu anasaa wingi when you receive that amount. Okay, so make sure you withdraw some amount. My withdrawal, I've already done it. I'm waiting for the M-Pesa to ring, and it has been a good week over on my side. We have been able to catch some good setups this week, and they have been amazing. So I'm seeing Meshak saying it has been a good week. Just past my first one. Makofi, yeah, we can give you your flowers, please. Let's give him his flowers. Meshak Kiplimo, thank you so much for passing that first one. I know it's usually hard, but you have tried it. Thank you so much for the flowers you receive it. So let's go to phase 2 now, and we head over to phase 2 and we make more money on the same. So asanteni sana from me and from my side. It's thank you so much. If you need any assistance, just a WhatsApp away or a call away, and my number, I'm going to drop it over. So thank you so much. You guys have a lovely Friday, have a lovely weekend, and let's meet on Sunday 8 p.m. for our usual weekly pre-market analysis sessions. Thank you. We may leave.